What's up, guys? My name is Mike D'Antonio, founder and CEO of StockedUp. Today, we had a crazy day in the market. We had the market up about 500 points, and we had a couple different stocks like Facebook and Snapchat lead the way. Snapchat did pretty well on earnings, and they rose about 37%. So obviously, that's a huge move. Make sure you stay and watch for the whole episode. We have a lot of great things to talk about today. We have a couple different dates to talk about, some new news with oil, a couple different hot stocks to buy, and then we have in pretty much a insider trade that had close to $8 million put into it. That expires on Friday this week. So we're going to have an exciting episode. I'm excited to be here. So Tom, if you want to lead us into oil.
Yeah, definitely. Today, President Trump actually got on Twitter and tweeted out to Iran that we will go ahead and shoot down any Iranian gunship that comes close to any U.S. gunships, and that's pretty much saying that Iran is going to stop threatening us because they've been doing a lot of crazy tactics out in the waters of Iran, like intimidating ships, like British ships, different ships carrying oil, and specifically U.S. warships. And pretty much what he's saying is that if they continue to do this, he will shoot them down. And this has honestly driven the oil market right up. As soon as he sent this tweet out this morning, the oil markets just rose steadily forward up. And like you said, the market then continued up as well, with Snapchat and Facebook leading the way. So
yeah, and the thing is obviously he put that threat out there, and just something to watch out for is if Iran continues to harass these warships, that could lead to some possible tensions between the U.S. and Iran. And, if it gets bad enough, hopefully it doesn't happen, but that could also have an effect on the market too.
And keep in mind that they might want this to happen, because if they're doing little things like this, like if this small news about attacking warships is going to make oil go up so significantly, they might continue to manufacture news like this and make oil go up itself, because they need it up right now.
Yeah, that's actually a great point. I didn't even think about that, but yeah, obviously it's a great point, and I'm sure, let alone Iran, I'm sure a lot of other nations would like to see that too. Like Russia's has a big interest in the oil industry. Same thing with Saudi Arabia and like Venezuela, and even the U.S. So it's a great thing to point out.
Yeah, and they did release the oil report today as well. We are at 15 million barrels right now. We were right on forecast. The forecast was 15.2 million. Last week, we were at 19 million, so we did drop our supply a little bit, which is good considering the price is low. So we're trying to really drive that price up by cutting our supply. So
yeah, it's a great point. So obviously, guys, we've been talking about today is Wednesday, April 22nd. And, we've been talking about the oil report for a couple of days now since Sunday's episode. It didn't have a huge effect because we were right on target. That's the main thing. But keep in mind that, another important event to watch out for tomorrow is the jobless report. And that comes out tomorrow at 8:30 a.m. Eastern time. So keep that in mind, guys. One thing that I've noticed personally is we've been seeing, crazy jobless reports, and the market continues upward for some reason. Like, I remember the first couple of weeks of these, crazy spikes in unemployment, the market still went up. So keep that in mind. So in terms of stocks to watch for, the rest of the week, we did have a couple big movers today. PayPal was one of them. They are up about 7%. The options are pretty cheap on PayPal. Now, here's a couple different ways to play it. It really depends, but it is a risky trade overall. But what I'm seeing with PayPal is kind of similar to what we saw with Netflix last week. Like, you see it has this big green candle up, larger than normal volume. And PayPal has a similar setup. But the thing is, there have been a lot of continuation plays recently, and pretty much that means like a stock's up big and it continues. You know what I mean? So that's something to watch out for with PayPal and even Facebook. And just keep in mind though, like, just because you see Netflix, like that was a very successful continuation play. Netflix popped up 20% last week. So did Amazon, right? Those were two great continuation plays. But, you know, there are some plays that don't do that, like Lulu. Lulu had the same exact setup as Tesla last week, and they had an awesome continuation play too. So just keep that in mind. Obviously, not every continuation play is actually going to continue, but just know what kind of setup it is. You know, it's just you should know pretty soon tomorrow. And the safest way to play continuation setups like PayPal, like Facebook, like Starbucks, even, and even Snapchat actually is, you know, with PayPal tomorrow, you know, you see it's up today, and there's only two things that could happen with PayPal. We know it's a continuation play, right? So it's either going to continue or it's not. So your only job is to, you know, see if it continues. And, you know, it's easier said than done, but, you know, normally if PayPal breaks today's high of 116, if it's breaking highs and has good volume to back that up, it's most likely going to continue. So, you know, there's no 100% telltale sign whether PayPal or Facebook or Starbucks or even Snapchat will continue. These are all hot stocks, by the way. There's no guaranteed way to tell that. But if it breaks today's high, you know, if it breaks the previous day's high, has good volume, the odds are that it will continue. So what do you?
Yeah, I love that strategy, man. That's my favorite strategy as far as continuation plays go.
Yeah, I mean, and it works the same on the downside too. So, you know, like if you have a stock that's like getting killed, like CRM yesterday, you know, this was a hot stock that we called out yesterday. CRM didn't really do anything today. But if you wanted to play this continuation play on the downside, all you have to do is say, hey, the low was 148 yesterday. It did not break the low of, it did not break yesterday's low, and it didn't break yesterday's high. It just kind of did nothing. And, you know, plays like this are just best if you know, don't trade them. But like if you watch CRM tomorrow and you see that, you know, it's breaking that low of 148, it might be a good continuation play for the way down. You know what I mean? So it's just a couple things to keep in mind. You don't really have to overcomplicate it. Personally, I've never, you know, found success using MACD or like a rune or like anything like that. I don't really know, like, if you have, Tom, but, you know, for me, I just like to keep it simple. You know what I mean? Like, hey,
yeah, price action is the way to go.
Look at, keep it simple. You know what I mean? Like, obviously do what you want. It's your money. But at the end of the day, you know, having any fancy, you know, random Arun or MACD or stochastics or whatever it is, at the end of the day, you know, they're just like simple calculations, like calculating like moving averages and stuff like that. So like, keep it simple. You know what I mean? I mean, it's what works for me, and I like it simple. I know a lot of my quote unquote professional traders that I know, they just keep it simple. So yeah, I mean, just keep that in mind. So actually, Tom, so I'll let you talk a little bit about the plays and other stocks you're watching, or, you know, comment on some of these hot stocks. And then after that, we're going to get into the options trade that someone put about $8 million into that expires tomorrow, or Friday, I should say.
Yeah, definitely. One of the stocks I've been watching lately is definitely PayPal. They've been trending up very nicely, like you've been talking about. And what I've noticed is that they keep closing at these highs, and whenever they close at highs, they end up opening with higher highs. So right here, you can see how they kind of opened, and then they hit a new high after they hit a high the day before. Just like you said, continuation plays, and they're just continually like bouncing off these SMAs up and just continuing up. But you can tell that the pre-market and post-market action is also becoming a factor here. And that's another thing to look out for with the continuation plays is, like you said, the patience is a virtue. Like, you just have to wait on these.
Yeah, for sure. And I did want to ask you a question, Tom, in regards of your SMAs. I know you do use a couple of them.
Yeah, definitely.
And I know that we've had a couple questions about exactly which ones you use and on what time frame. So I know Sean commented that in the YouTube comment. So, you know, like I said in last night's podcast, guys, like, if you guys have any questions, we'll just answer them. We'll answer them right here, you know, on this podcast. So, Tom, what SMAs or EMAs do you use, and on what time frames?
All right. So what I use is let me just go to them really quick.
Yeah.
I'll just go ahead and go up to studies and then edit studies. And then this is how you guys can add them in as well, if you want to go ahead and add them in.
Mm-hmm.
And all you have to do is just go ahead over here to the settings and you can tell what setting you have. So I have a 100 SMA and it's purple. So I use a 100, a 200, a 300, a 500, and a 1000 simple moving average. And then I use one 500 moving average exponential. And what I do is I go ahead and I look at the chart, and obviously you have to make them all different colors. And what I like to do is in our stock mastery course, I actually have every single one of these color coded so that you guys can copy all of my colors. That way we can just say like a bounce off the purple or a bounce off the blue, or we'll say the blue 100, because then everybody knows and we're all on the same page.
Right. Right,
And
for sure.
and that's just that's what I'm using is the 100, the 200, the 300, the 500, and the 1000. And then I use the 500 EMA, which that one's in there because EMAs tell a little tighter of a time frame.
Mm-hmm.
And that's actually going to be the green line on my chart. And you can tell that the stock has actually bounced off of the green one in the past couple of days as well. So
Yeah, for sure. So what time frames do you mainly use these on?
the only time frames I use these on is dailies and 15-minute charts.
Got
And the only reason I do that is because I've actually sat down and went over multiple time frames, and I haven't gotten into anything weird like 2 minutes or like 10-minute charts, just the
Right.
standard like 15-minute, 1 hour, 4 hours, stuff like that. And I found that the 15-minute and the daily is definitely the biggest telltale sign. And if we look at the S&P 500 here, I love doing it for long-term trades because you can see how with this 1000 SMA, every time that the S&P bounces off of this 1000, it definitely moves very significantly one way or the other. And whenever the stock market was going down last December, you could actually have called the bottom, and it just touched this SMA for only one day, and then went right back up. And most people would have never seen this or even noticed that. And if you're playing the SMAs, that's a very good strategy, is to buy once it's coming down to hit that. And you're looking for a trend reversal change on this, so it's kind of like a continuation play, except you're just going in the opposite direction. So you still have to be patient and wait to see that bounce and then get in. You don't want to get in prematurely and then have it, for example, like right here in the past couple months, how it just hit the SMA and then fell right through about 500 points.
Mm-hmm, exactly. So it's not just like, it's not one of those things where you see, hey, it hit the line, automatically buy. You know what I mean? Like you kind of have to like eye it out. It's like you said, it's a continuation play at the end of the day. Like the line tells you, hey, we might see a reversal back up here, and you're gonna know if it's gonna reverse pretty quickly or not. So it's another thing to keep in mind. So we are gonna get into the pretty much $8 million options trade that expires on Friday right now. So the trade is with Netflix, okay? Netflix, and we're going to go down to, it is the Netflix 430 calls that expire this week, April 24th. Now, before any of you guys think, oh, buy Netflix 430 calls, do not do that. Do not do that, okay? Here is the thing with this trade, okay? I study a lot of like volume analysis, a lot of like big order trading, and for most of the time when there are big orders, most of the time they're selling premium, okay? Not all the time. Like with the Apple trade, that I know a couple people who commented in last night's podcast, they played that. So that play went from like 300 to like 1100, right? Now, there are plays where they actually buy the option. But with this Netflix trade, okay, I am going to take the guess, you could say, or the prediction that the institution is selling this trade for premium, okay? Netflix 430 calls. The Netflix 430 calls are down 82%, okay? And with this trade, they cost $500 each. They are $9 out of the money, and Netflix just had earnings. So, because of those factors, just from an institution standpoint, especially to buy an option that only has 2 days left of expiration, and then to put that much money in there with that far out of the money, it just doesn't make sense to me why anyone would buy that. And also just looking at the chart, there was a big big trader on this specific strike, but I think they are selling that for premium. So pretty much, I think they are just selling that either as a naked call or a covered call. Most likely a naked call they're selling that as. Pretty much they just short the option. So in order to play this is, this trade is pretty much making the assumption that Netflix will be below $430 by Friday, okay? What you can do is the safest thing you could do is you could sell the 430 call. If you have enough buying power, you could just short the 430 call. But if you don't have a huge account, you could just like short the 430 call and buy like the 435 call, and it'll give you like a call credit spread. It might, you might have like a 20% like ROI, if it goes your way. It'll charge you a good amount for a collateral, but that's one thing. Another thing you could do is you could buy Netflix puts. Okay, this is definitely the riskier route, so keep that in mind. Honestly, though, with Netflix, if it has that like continuation style play, like if you see Netflix like gapping down tomorrow, or you see it just red, that might give you like that extra like like confirmation. But with Netflix, I just want to point out that I really think they're selling these calls. They can be buying them, definitely, but just based off my analysis and all my research and just kind of using common sense, it really looks like they are selling these for premium. So yeah. So and another thing is we've had if you guys aren't in the Stocked Up Discord chat, I highly recommend you join that. I post completely free options day trades every single day. We have a ton of great people in the Discord chat. Like seriously, we have some amazing people in the chat. We're talking about stocks, finance, options, a bunch of stock related things all day long. It's completely free. If you want to join, the link will be in the description down below. It says Stocked Up Discord chat. But we have a ton of great traders in there. But someone asked me in that group, like, Mike, I like, let's say I have a position, right? Like, how do I like mitigate the risk, or like how can I just put myself in a better position? So guys, I'm going to show you kind of like some options magic, you could call it, that I did with Beyond. So I am proud to say this. So I got in a Beyond trade on Monday. It ended up doing really well, and I was pretty much in a position where I couldn't lose, right? And I took that a step further today. So the Beyond trade that we talked about on Monday, where I got guaranteed $17 to make $1,517. I edited that play a little bit. I sold one of the call debit spreads off, and I added a couple of credit spreads. So this is how my current situation is with Beyond. In the worst case scenario, I will make $79. And that will happen if Beyond is $85 or less. If Beyond goes to $90, I will make my max profit of $1,279. If Beyond goes if Beyond goes to $96 or higher, I will make $879. There's literally no way I can lose on this play. And some of you guys are like, like, how do you do that, right? And pretty much I just put myself in a win-win scenario. And the way I did this is I'm gonna go to the Beyond play, and it all starts very simple actually. So what I did is I went to Beyond on Monday, and the 85 strike calls I bought for $187 each on Monday, and they ran up so much that day. They ran up to, I believe it was like 425 as the high. And pretty much what I did is I don't want it to get too complicated because I don't really want to lose you guys here. But I just sold the 91 strike calls for 207. So I get all my money back pretty much. And I just have a debit spread for free, right? So you guys can see right here on my 85 strike calls, I am up $565. And on the 91 strike calls that I shorted, I'm up $92. So it's a win-win, pretty much. Then what I did today is I sold some credit spreads on Beyond. Not a lot. It's just to match the position that I have with Beyond now, just further out of the money because it's just the numbers made sense. I'm not going to get too in depth into it because I'll probably lose a lot of you guys here, but I just put myself in the win-win scenario. And really what I want to get into real quick is, guys, if you guys are ever up like 100% on something, you guys don't even realize how many ways you can use that to benefit you. So for
Yeah,
example,
that's so important. There's so many different ways that people can use that.
that's the thing. Like everyone gets caught up with, oh, you have to predict the direction right. Oh, you have to do this. Oh, you have to do that. You have to have this certain stop loss. And, yes, it is important to have stop loss, but more important than anything else is to be able to manage, one, winning trades, but also losing trades. So for example, with this Beyond play, I was up a lot and I still thought Beyond was going to go up. So I didn't sell on my options. I just turned it into a debit spread, and in the meantime, I literally got paid to do that. Like I literally got all my money back, plus some, with the opportunity to make even more money. You know what I mean? So that's just kind of how it works. I've
And
got
one thing to keep in mind is that it's complicated for a reason, guys. If everybody knew how to do these trades, the markets would be crazy, and I think people would make a lot of money.
yeah,
But you have to really take out the time to learn these and get them right because they are pretty complicated. But once you understand them, it will definitely help your trading so much. And like if you guys are ever trading calls or puts and you want to turn them into a spread, just come into the Discord and ask us, and we can help you turn that play into a spread.
right, exactly. So just one quick note is, guys, to do this, you have to have spread trading enabled. It's not too hard for Robinhood. You just have to go to your settings and enable it. But with other brokerages, you might need other requirements. But anyways, as I was saying is, I made an advanced options trading tutorial video on the YouTube channel last week. Got a ton of great feedback from that. So the next version of that, I'll probably be talking a little bit more in depth with how to get these guaranteed plays. But just keep that in mind, guys. At the end of the day, if you're up on a position, there's so many things you could do to just put yourself in a total win-win scenario. In terms of losing positions, there are ways to mitigate that too. You could turn them into debit spreads or credit spreads or iron butterflies and things like that. But that's a lesson for another video. But Tom, did you have any other last minute stocks or anything with oil or anything options to go over for the rest of this podcast?
Yeah, I had one more stock trade here. I have Boeing up. We've been watching that the past few days, and we've actually been. I drew a triangle on it in the first podcast I believe we did, and you can see how it's been bouncing off of the triangle. And in after hours today, we did actually fall right below the triangle, and you can see how it bounces directly off of it. And then now we're down. So if this does continue down tomorrow, maybe Boeing puts would be another solid option tomorrow to trade as well.
Yeah, for sure. Yeah, great technical analysis. So, guys, obviously, so yesterday's video did awesome. We had a lot of great comments actually. So, really, what me and Tom just wanted to tell you guys is, obviously, when those comments helped the video so much, and we have the YouTube channel growing very fast now. So it's because of all you guys who comment. If you guys aren't subscribed, make sure you hit that subscribe button. It helps the channel grow a lot. And me and Tom just want to take this, quick little moment to just thank everyone individually who commented on the podcast yesterday. So I just want to thank Jesse, Michael, Ronnie, Peter, Vision, Joe, Carol, Linda, Mason, Sean, Hunter, Ham, Daniel, Roberto, and Cio. So yeah, thank you guys so much for commenting. It literally takes 10 seconds. So, it just gives us the motivation to keep putting out these videos. And, Tom, I'm having a great time doing this. I love doing these podcasts. It's exciting, and I'm very excited to see what the future holds.
Yeah, me too, Mike. I'm really glad to be able to bring this to the community. We've been talking about it for a while, and we've gotten some feedback from people, and people have suggested it before. And I'm glad to finally put it into action here. So
Yeah, exactly. So, and you know what? It seems pretty valuable so far. So, on Sunday, with Apple, and this is just off the top of my head. I know there's a lot of other plays, but if you did trade the Apple options we were talking about, that play went from $300 to $1,100 in literally 2 days. So keep that in mind. I know a couple of you guys played that and did very well. I played it too, so. Keep that in mind, guys. There's a lot of lot of opportunities in the market right now overall. But on that note, I just want to say, if you guys are not subscribed, hit that subscribe button, hit the like button, and if you leave a comment, that really helps grow the channel. So I just want to say thank you for watching.